Right now, Iran has officially threatened to push oil to $200 a barrel, and the International Energy Agency just authorized the largest emergency oil reserve release in history to prevent a global supply collapse. And if you look at the stock market today, this is the S&P chart, you would think that absolutely nothing happened. It barely moved. We are still in the range bound movement that we see, and we are sitting around the support level right now, and there is a lack of strong momentum in either direction. As you can see, the candle from yesterday, the market was pretty indecisive whether to close above or below this 100 EMA line. And even though we see buyers still defending key support, the billion-dollar question is, why is the market completely ignoring one of the biggest geopolitical energy crises of our lifetime? And when will we see things finally break? Especially oil is still climbing up even though we are seeing this supply release. So in today's video, I'm going to break down to you the latest CPI data, the escalating situation in the Middle East, what has come out the past 24 hours, and exactly what the VIX and the oil chart are saying. The main reason for the calm that we saw is that the February CPI report came in yesterday and it was almost perfectly aligned with expectations. We saw headline CPI rose 2.4%, completely unchanged from the previous reading, and month over month it did increase 0.3%. And when we look at core CPI, which strips out food and energy, it actually rose 2.5%, which is aligned with the forecast. And for now, what the market is expecting is the Federal Reserve to actually keep the rates unchanged at next week's meeting. Then the biggest concern right now is oil prices, especially with the ongoing conflict that we are seeing. But if you dig deeper and you look closely at the data, so this is from the Bureau of Labor Statistics, there are some early red flags, right? Tariffs are beginning to pass through to consumer prices. So if you look at apparel, it actually grew month over month of 1.3%, noticeably higher than the previous months. And more than that, if you look at energy prices, fuel oil is up 11.1% month over month, and utility gas services is up 3.1%. Now, this is way higher growth than what we are seeing across the board. And considering that this February CPI data was actually for the period before the war actually happened, the fact that oil prices and gas prices are already increasing is actually concerning. And the markets are actually ignoring this fine detail right now, but it will matter for next month's CPI when we see the full extent of how oil prices trickle down to consumers. And looking at the VIX, despite the flat index that we saw yesterday, volatility still remains elevated and is still trading above the 20 level. It is still pretty high as compared to normal times. And when the VIX holds above 20, while stocks remain flat, this is a bit of a warning sign. What does it signal? It signals that institutions are operating in a high uncertainty environment, bracing for any sudden swings in sentiments. And where is the cause of all that? Where is the epicenter of that? It is the uncertainty in the US-Iran war. And over the past 24 hours, like I shared, every hour there are new news coming out. And over the past 24 hours, we are seeing that the escalation has actually been more severe than before. Now, there are a few things that happened, so let me break it down. So first, we've seen Iran has officially signaled a shift in military strategy. They are moving from reciprocal strikes. So reciprocal means that if the US attacks me, I'll attack back. And they are saying that they are shifting to continuous strikes. Okay, this is the first one. The second one is they are the one that say oil will reach $200 a barrel, saying that they will not allow a single liter of oil to reach the United States, Israel, or the partners, and any vessels heading to those destinations will be considered a legitimate military target. And at the same time, this was what we saw yesterday, that Iran is actually laying mines in the Strait of Hormuz. So initially, after they said that, US said that no, they are not laying mines. But this report came out, US intelligence report came out that they have actually begun doing so. And as we know, the Strait of Hormuz is the most important energy shipping routes in the world. And right now, reports have also come out saying that the Iran sea mines are one of its most powerful weapons. And even though the US military said they will escort US oil tankers over, I doubt no one will go over because of this. This is a very big risk that could sink any oil tanker if they even try to get past the Strait of Hormuz. So even though the US military has said that it has already targeted several Iranian mine laying vessels, but the situation right there still remains uncertain. Now, meanwhile, we do also see US intelligence saying that the Iran government is not at risk of collapse, even though last week we saw the death of the supreme leader. But immediately, the regime was taken over by the next in line. And reports are saying that the leadership is still largely intact and is not at a risk of collapsing anytime soon yet. Okay, and you can see that this article was just 1 hour ago, which means that if you read deeper into this, what does this mean? It means that this conflict could potentially drag on longer than some had expected, even as Trump is saying it is very complete. And the fallout right now, this is already reaching domestic shores in the United States, right? FBI has really reported warning California law that about the possibility of a retaliatory drone that is going to come in from Iran, okay, that's going to launch from a vessel off the United States West Coast. Now, if this happens, this will become very, very serious because now the war has been concentrated around the Middle East region. But if this actually comes to the US shore, this is going to get ugly really, really bad. Okay, this will become very, very serious. And right now, we are seeing policymakers, governments around the world, they are trying to stabilize the whole energy market. We are seeing the International Energy Agency, they are coming out and they agreed to release 400 millions of oil from strategic reserve. And this is even larger than the previous 182 million barrels of oil that was released when Russia invaded Ukraine in 2022. So you can see the extent of it. It is more than double the previous one. On top of this, the United States is also expected to contribute 172 million barrels of oil from their own petroleum reserve. Okay, so the reason for them doing all this is to offset any supply disruptions that has been caused by the conflict. And as you can see, right, normally a supply of this magnitude would absolutely bring down oil prices. But let us look at oil prices over the last 24 hours to see what actually happened. Despite all the news that we saw, despite the supply push into the market, oil prices has actually rise over the past 24 hours. So this is something that is pretty surprising. It has gone back to test this resistance level of $95 that was formed back in 2023. So the price action that we are seeing now is entirely headline driven, right? Earlier in the session, we did see oil actually dip on the massive reserve release news, but this actually lasted barely an hour. And as soon as we saw more reports of the naval mines coming in and Iran saying that they will do the continuous strike, we started to see oil prices going up again, and every single dip was instantly bought back up. So think of it this way. Why would oil price increase? It is because the market is uncertain. The markets do not believe that the supply will come back anytime soon. That is the whole idea. So even though we are seeing a large supply coming into the market from the International Energy Agency, the market still feel like this will not be enough. This temporary release will not be enough considering what Iran has said, the things that they are threatening to do next, and with Trump also saying that this is still going to go on. Okay, so the market is now balancing and pricing in this massive geopolitical risk premium, and it is far more terrified of a permanent supply disruption in the Strait of Hormuz than it is impressed by this temporary government reserve release. And it's not right now, you can see that it's not really trading on technical patterns, even though it is sitting at a very nice technical level now. But the moment if we see any new war headlines that prove that supply is going to be disrupted even more, or the war is going to be longer, which can be interpreted either from the US or Iran side, this will just break the resistance up again back to $100. Now, stepping back into the macro view, we can see that our portfolio right now is caught between a tug of war between two forces. On one side, we do have stable inflation data, which is keeping the stock market calm and rate hike fears at bay. But on that same side, right, we do also see some red flags within the inflation data, like we saw with energy prices and with apparel prices as well. And on the other side, the escalating conflict between the Middle East, between Iran and US, is still ongoing. Uncertainty is still very, very high. It is not at a level where things are rosy once again. And that's the reason why we are seeing the market being very undecisive, even though there was very flat movement. VIX is still elevated and oil is like a powdered keg. And going forward, what is the only variable that matters now, at the very least in the next few weeks? What matters is the Strait of Hormuz, because that is the largest shipping route. If a major shipping vessel is struck, right? If news come out saying that a major shipping vessel is struck or Iran actually strikes the US West Coast, energy prices will spike again. We will start to see global inflation ignite again, and which will flow down to next month's CPI as well. And this is where we'll start to see the calm in the stock market starting to fade away, right? And until then, we are still in a dangerous wait and see environment. So, keep your purchasing size manageable. And one of the biggest signs of when we will see things coming down is actually the VIX if it falls below the $20 region. Now, that's all that I have for you for today's video. If you do enjoy such market update content, be sure to hit that like and subscribe button. It would really help me to create more of such content for you. Thank you, and I'll see you in the next video.